following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Welcome to 2017, first trading day of the new year. My pleasure to be here. Great program we've had up until now. Let's try to keep that standard up and all the way through until 6 o'clock this evening. Dow is up 66. It was up 166 earlier on, pulling back. You know what? Let's just take a little time. There's no rush. We've got a whole year. Let's go through things step by step. Let me just move this one chart from there to there. Good. Got it ready. And now open it up, and I can give you numbers. Let's run numbers, and then we'll do the analysis. The E-mini is up 11.25. It made a high of 22.73. This is the March contract. Well, I've got the continuous, but they're the same price. So 2273, round number high, at a peak D, all-time high. That was back December, wasn't that the 7th or so? The 13th, back on the 13th. And we've been a choppy sideways, slightly lower highs, slightly lower lows environment, number one. Number two is the weekly chart has an alternate count, E/A. At this point, I'm still in favor of keeping it as a parallel count. The MACD at 92% is really strong. The MACD is very strong. The stochastic at 92% is very good. I don't see any reason to change that. If there is a close at any point in January below 2217 underneath the 2,219 period moving average, that'll change things. I'll have to reconsider. At this point, I'm considering it that there's more likely an A, that we're going to make a lower, some kind of a weekly turnaround here, that we've probably seen much of the high for this week, and that within that context, we'll make lower highs and lower highs, lower highs and slightly lower lows. Okay. And that rectangle with the H pattern, we've already gone under it, gone above it. Now we're going to watch real close. Just make it real simple. A close below 22.43 in the E-mini any one of the next 2 days is going to be a negative. The 120-minute chart did go to leg D and the big spike the second. What I loved was that there was an opening spike. Then there was the pullback, and everyone would be saying, oh, watch out, watch out. And then there was another high. And then the bears would say, oh, no, this is ridiculous. Now we're going to go higher. And the bulls would say, aha, told you. But in fact, I think what we're looking at, I worked these 2 4-day weekends. I think I worked flat out. I don't know how much work I did, but I spent hours and hours studying the different charts, studying the different chart patterns, studying the dailies, studying the weeklies, studying the monthlies. Did a lot of work for my subscribers. I've given them an overall kind of a plan that we're looking at. I'm starting to look at stocks that really on our list to buy. I don't want to buy them right now. I want them to pull back, etc. Most importantly, for my opening course subscribers, I also gave a lot of studies, a lot of pieces, because I'm in the middle of this course. It's a 3-webinar course. We've got the next one coming up a week from today on the 10th. And most importantly, we've had 2 already, and they're archived that people will be able to go through them as many times, had questions about them. So what's really exciting about this is that within the context of the markets, we've got a variety of packages. You're looking at, and I'll go through this in a moment, you're looking at some areas that have been very weak that are trying to rally. I'm suspecting that there's going to be a counterpoint rally in some of those weaker sectors, and then all of a sudden we're going to have a look at the major indices. And regardless of Trump, when he's coming in, what he's going to do, there are certain things. There's a reality and there's speculation. I would prefer to deal with reality, and therefore I think that the move that we have from November needs to digest its gains, and that's really what we're going to be seeing. So we've got Rick in Denver. Hi, Rick. How are you?
Good morning, Basil.
You would like to, Happy New Year, first of all, and you'd like to look at?
I'd like to know about an entry point for Nugget.
So Nugget is the 3 times, let's see, this is the long position. The direction shares daily gold Nugget miners ETN. And my suspicion is that this is something you've worked at previously. This is not new to you. So,
no, I've done it before.
Okay, so then let me do a couple of things here. I'm just going to, if you don't mind, I'm going to go to the continuous gold chart. So this is in leg A, very strong leg A to the upside. Gold is already in leg C, possibly a peak C today. Okay, now, if you don't mind, I'm just going to give a little overview, and let me show you what we're looking at here. If I need to go to the dollar, because the dollar strength earlier today, and then the continuation to $1.41 up at 103.62 at this particular point. I think I'm a little behind. It's actually, I see the futures at 103.33, so it's pulled back a little bit. What I'm looking at here is that the move up in the dollar makes this a leg G/C, and my contention is that in this particular kind of pattern with a potential Chapman wave instant restart, it's probably a leg C in the dollar at this particular point. And what I'm looking at is that maybe there isn't all that much to the upside left in terms of price, but I think that the trend is still to the upside and could get very choppy here. While it's chopping around, I think that gold, now this is something I discussed last week, has a chance to have a choppy, slightly higher highs, slightly higher lows kind of scenario for the shorter term. One of the things I'm watching very closely on the gold contract is that while the daily contract had a very nice technical move in both the MACD, the moving average convergence divergence, and the slow stochastic, the weekly chart is really, and this is the thing that's been bothering me, and that's one of the reasons why, even though for my subscribers, we have long positions in a gold stock and in the gold miners ETF, I'm looking at this and I'm saying, I think this is a counter trend bounce. And that's the only reason why I want to take a moment just to talk about it in terms of you're in the very high, you want to be in the very highly leveraged 3 times gold instrument. And I'm looking at it and I'm saying it's acted very well. I'm a little concerned about the weekly chart. It's one of those situations where as it moves higher, I can get more confidence. But if it starts to kind of meander here, it's not able to really break into the 10s, but it stays around the 820 to 850, even the 860 area, that's going to say to me that Nugget is going to be less volatile for upside movement and more in a bounce context. So let me just say that. Now, let me just ask you, do you have a position right now in Nugget?
No, I don't.
Okay. Now, so this makes it a little tricky. So you've got A, B, C, D, A, B, C, D. So 2 peak Ds in the 120-minute chart. It's pulled under. Okay. The way I'm getting, I tell you what, there's a break coming up. There's a scenario that I would give you, kind of fits into what I'm doing. And the only reason why I want to take a moment to think about them, I want to give you the numbers that I think would be the best numbers for an entry and then what to watch for. So if you can hold on, is that okay?
Yes, I will. Thank
Folks,
you.
we're looking at gold. We're looking at the Nugget. We're on with Rick in Denver.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Let me get rid of this chart here. I thought I'd show something just real quickly as we're coming back on air. This is the 2-minute chart. I had this little arch formation of the E-mini, and I think it's going to come back and retest. I think that we pretty much hit the high of the week already. So let's see what's going on, and we've tried to do that appropriate action in the newsletter. So let's go back. We've got Rick in Denver. So, Rick, what I'm looking at here is, let me just go back to this chart here. I went to the 10-minute chart. So my thinking here is that the market is a little bit vulnerable. All the work I did said that there are so many stocks that are that at least on the daily charts should have a good pullback. I'm still concerned. I've been talking about it now for weeks, maybe months, about Amazon and the other very big high-tech stocks in the NASDAQ 100. So I'm thinking here that there's a chance that yields could start to chop around with slightly lower highs and lower lows, so the TLT maybe could have a bit of a bounce. I'm thinking that the gold as more as a counter trend move than anything else. I know people have been talking about it as more an inflationary concept right now, but I'm thinking that gold has a chance. Let me just go back to the GC. Has a chance to at least move higher. And it's formed some kind of a base that I think is going to work for a while. Later, I think gold actually goes down a little deeper. But in the shorter term, so this is what I was thinking. The nugget that you and I were looking at in your GT trading at $8.32, I would start a position right here. But I would, it depends on your ability to manage the trade, but at $8.32, I would actually have preferred one quick slide over the next hour or so, but I just don't think it's going to be there. So that $8.25, but we're talking 6 cents, but we are talking 6 cents, that's 1% on a stock that's at $8. So that makes a difference. But I'm thinking that based on the technicals of the daily, which is the only way that you're going to be able to help the weekly chart, I think there's a chance that at 8.34 over the next 2 days, I think the dollar's going to bump into some resistance. But I think at 9.27, you start to expand nuggets upside. And what would be my target? My target would be the high of the 17th of November of 9.84. Well, 9.84 is over 12% from here. So I would go step by step, and I say at 8:33, I'd start a position. If you can think of it as two small positions, one here at 8:33, 8:34, and on the day I'd have another one in for about 8. I really would like the 825 area, somewhere at 825. I put another little position in, and what you want is by tomorrow, by late this afternoon or tomorrow, you want to see the nugget, which is trading up 69 cents at 8:33. You really want to see it trading towards the 861, 865 level. As soon as it does that, it says now there's a really good chance that the stochastic at 68% is going to try to get to 80%, and the MACD will expand. And that says that your targets on the upside, those would be my targets. First, 927 to extend the leg we just saw on Friday. And then the big thing is, how does it tackle the whole 984 area? Why? Because that puts it over the 9-period exponential moving average, and it'll be the first time it's gone above that 9-period moving average significantly, and hopefully will hold there all the way through the week. That's really what you want to see. The other thing I'm going to say to you, 9-period moving average of $7.39, that is far. That is a dollar away. So that's 11% risk. I don't really like that. And I'm just going to say to you, my stop on both positions, I don't think at 825 the second, 822 second position, I would make 18 to 815 a stop on the day, because if it takes that out, it's probably going to retest the 9-period moving average. So on the day, I think there's a chance that gold is acting pretty darn well, considering that the dollar went up so sharply. Let me do that one more time. The dollar, dollar's pulling back a little bit. I think you can start your position here. I don't know the numbers that you used to, but you can start it here. But I would have a buy-in, maybe 6 or 7 cents lower on the day, hoping that I don't get it, actually. That's really the way it would be. You want the move to start right now, and you want the gold to be, you want gold to close very nicely by the end of the day. You want the dollar to be pulling back. Hope that helps you.
Okay, thank you, Basil. I appreciate it.
Okay, thanks for calling, Rick. So we've got that. We're looking at gold. Let me just do that again. I just want to put it into the context of, see, the GDX, which is up, well, it's up 58 cents at 21.50. We were very fortunate on Friday. We got it on the dip to the downside, and that's the gold miners. See, I like it. The gold miners has a much nicer pattern than gold itself, and we've been talking about that for a long time. So I'm kind of impressed with the action. It's just on the day. Anything can happen by the end of the day. But considering the strength in the dollar, this is very nice, up 2.75% on the GDX, trading at 21.48. I like that. And the 120-minute chart really is not out of the woods yet. You can do this live. There's your up arrow. Here's your peak. And all I do is count each successively higher peak. That's the simplicity of the technique. It's when you reach certain levels that it becomes a little more complicated. C, D, is that? I bet that's a new high. 88. Oh, there it is. So that's 88, 88. So that's EFG. Okay, so it's going to EFG/C. I love this. Okay, so let me just do this here. So this is an E. That's an F, and that's a G, and I'm going to just put this a little softer over here. Yeah, this is a G/C. Okay, I've got it. So the 120-minute chart is in the Chapman wave G/C alternate count. There's a good chance that it could go to a D, and that D would be, and it's very important it does it very soon, within a day or two, above 22.24 starts your leg D. Okay. So I feel comfortable with what we were discussing just a moment ago. Here's the other thing I want to do. I never had a chance. I'm going to show you the crude oil. Crude oil, 54.51 was peak E right there on the 12th of December. We've seen a lot of these patterns where within the rectangle, there's a rally that tries to take out the previous high, and it stops just below, right on, or just above, and then it pulls back. And we've seen them all over the show. Well, this rectangle is a potent rectangle because it tells you that the upside barrier is very strong, And then even if you go above it slightly, you should come back again in this rectangle formation. Let me make it a little bigger so you can see what I'm talking about right there. See that? That gray, I drew it in a little while back once we made that pattern. And now we got repelled from the high of the day, 55.24. Can't be 55.24. It is. But how could it be? Then that can't be. Oh, 55.58. I didn't update that. Sorry. 55.58. 55.58. Thought that was a little weird. And we did. We went just above it. Now, it's exactly the rule of thumb that I use in the Chapman wave methodology. We went just above it. 58. There we are. Okay. So there's a down arrow. And now we're in the rectangle. We did not break 55.58, and that says, yep, there could be one little pop to the upside in crude oil. I'll talk about it a little more. We don't have to rush. It's the beginning of the year. We got plenty of time. Dow's up 65. S&P's 1271. Here's this chart again of the 2 minutes. There it is.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, let's just go through this again. So what I'm saying is that there's a pattern. Gosh, I did this so many times over the weekend. I don't think I'm going to find it because I just took it off. Oh, that's all right. Doesn't matter. So this rectangle pattern, where you can identify what we call a flagpole in traditional technical analysis, it looks like a flagpole, and then the price comes down. I almost always will drive from the lows to the high. I draw a rectangle formation, and the theory is that in the 120-minute chart, or at least the smaller time frame, you should get to a D as it tries to climb back to the previous high, and you can even do it in the regular time frame that you're looking at. in this case the daily. And that suggests that even if the 55.24 high of today is taken out, you've got tremendous resistance at 55.58. And I'm suspecting that we're going to go fractionally above 55.58 in the crude oil continuous contract to make a leg D, and then we start coming down. And if we come down, you've got to be very careful, because the way everything is looking, I wouldn't be surprised if the market, which I believe is in a sell mode in the Dow and the S&P and most of the others, until a new high is made, I think that we're going to be chop, 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 lower highs and lower lows for a little while. That's really what I'm thinking. Okay, now let's go to this crude oil. So crude oil has 52 to 50 as key support, major support at 49.70 on the continuous contract. Meantime, just chop, 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 kind of matching the market right now. Now the moment I saw that the futures were opening higher and they went to about a 5. Actually, I was out when it happened, so I had to look at my cell phone, but I was checking it, and we went to about a +5 and then a +6. And then we went a little higher, and then we sort of stayed even for most of the evening. And then early this morning, just there was a whole bunch of new buying, and then the buying, and then buying. So the futures were up, and basically what that was to say, new year, new thoughts, new this, new that, but it was based on a fictitious, at least in my opinion, move when you're looking at this. Now we can go through them. Look, the IND, do we have any calls? No. The Dow made a high at 19,981 on the, what did I say it was on the 20th? 19,987 with a Chapman wave 2-bar reversal. It's a particular technique I've worked on for years and years, and I love it when it comes about. We were able to short the exact low in the instrument that we use for volatility. It actually ran all the way to Friday. It was up, I mean, like 17, 18%. We got out this morning because I didn't want to give up all those gains, so we only took a gain of between 4 and 5%, which is very nice. I mean, this is not an easy instrument to short. And I will probably go back in, but we have shorted the market via other instruments, and we have stocks that we're short, but we also have just a couple of long positions. Why do I mention that? Because it's the lightest we have been in a long time. Why do I want to be light? Because I'm wanting, my mindset is that there are certain sectors that I want to buy. I'm not sure that I want to short them, even the Dow, even though that I consider it to be, we've shorted via another instrument, because I'm trying to keep my mind as fresh as possible, because theoretically, I'm thinking I'd like to be buying the Dow on the next sharper pullback, but I don't know where yet, and I kind of want to have my mind clear. So I would just exit the one position and then give a fresh buy to the Dow. That's the way I'm looking at it. But I haven't got all the evidence in yet, other than to say the daily is absolutely based on the technicals that I use. MACD stochastic gets a down arrow closing below the 9-period moving average 3 days in a row. The technical term is it's in a sell mode. But does that mean, oh, sell mode is going down from 19,800 to 16,000? No, it just means I'm defining what it's doing, that technically it's in a sell mode. If it makes a new recovery high, I have to deal with that. That's just the way it is. What tells me that it's a position that I feel a little bit more comfortable in is that this was a perfect failure so far, and it's only 2 hours into the opening session of the opening year, of the opening week, of the opening day. So all I'm saying is everything I'm looking at here seems to confirm all the work that I did over the weekend. And believe me, I did long-term charts. I did short-term charts. I did charts of things that, I looked at the Dow and certain instruments within the Dow, stocks within the Dow. And there's a lot here that says weekly charts are still very good. The daily charts are not. And you have to put that whole thing together. Okay, so now let's go. So the Dow is up 64 at 19,827, a close above 19,000. Let's just be safe. A close above 20,020 just opens up a whole different spectrum. I just don't think it's going to happen right now. I think that 20,000 has to wait. If it was going to take it out, would have just taken it out. And not only would it have taken it out, we would be at 20,250 right now. So I do think it's just a stalling phenomenon at this particular point. Okay. So the S&P, SPX.X, there we go. A nice pop to the upside, now back under the 9-period moving average at 22.51. It's up 12. That's a big number, but the high was 22. Did I not type that in? 22.77.53 on the 13th. And that, to me, look, 22.73. What did I say? 23 on 12 to 20. I can't even remember what I said. So I have to do it over again. So let me just double check here. 22.73. 22.77.53 on the 13th. Boy, did I get those numbers mixed up. 22. Edit. All right, here we go. 77.53. Boy, that wasn't very good, was it? And that was what I said on the 13th. I think I said the 13th. I'll check that out. All right. So now what we've done is we've gone from 22.77 down to the low on Friday of 22.30. Was that 5? 22.33.62. And now we've had a pop-up, and that pop-up is having trouble holding, but it's still way above the low that was made on Friday. Number 2, we're looking at the weekly chart, and that's got an E/A. And then look at the inside, Chapman Wave inside track repellent zone. It is a repellent zone so far, and it's still leg C in the monthly, and that's very positive looking out. All right, so the parameters, 22.78, let's call it 22.82, really opens the upside, and it means it can test the upper part of the inside channel. But a move below 22.30, and I think this market is in trouble shorter term. All right, let's go to the QQQ, 1, 2, 3. QQQ didn't have as big a move. It's way under the 9-period moving average for the 4th time in 4 sessions. So far, it's at 119.20. I'm calling this a peak G in the, I gotta double check that. Yeah, peak G in the daily, and at 121.52, a move into the 122s is very positive. I just don't think it's going to get there just yet. So I'm looking at this and I'm saying chop, 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 slightly lower highs, lower lows, and that's really what I'm looking at. Let's go to the IWM. IWM, ugly candle, a lot of big red ugly candles. The peak C1, C2, double top in the Chapman Wave, daily. Peak G in the weekly, G/B. I still got to call it G/B because the MACD and stochastic are good. I think this is in a little bit of trouble. Monthly is very strong in the MACD. Dow's up 49, S&P's up 10. I'll be right back. Basil Chapman, Tiger Technicians Hour, first one of the year. Exciting. No, very exciting.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So here's this arch formation. Remember the Chapman wave lowercase h pattern? Breaks the left side low. Watch out. In this case, remember 2244. I said if it takes that out, be careful. So here we are. Now we're in a new move to the downside. And the E-mini had a high today of 2,259.50. It's trading at 2,242 right now. That's 10 points. Just boom, just like that. Okay. Now, when I'm looking at this, I'm going to suggest to you, I had a question about the IYT. I'm going to go through the numbers here. The IYT, which is the iShares Dow Transportation Average ETF, is trading at 162.40, down 44 cents. He made a high in the daily chart. Let me just move this over right here. A peak F. Remember peak F on the Chapman wave when the technicals are failing like this? Not good. And it made a peak F on the 9th of December at 171.16. There's a little doji candle. Everything about it was a negative. And now it's trading at 162.40. 9 points. But 9 points, it's had a spectacular move to the upside. Big deal, 9 points. Hey, it is a big deal, and I'll tell you why. Because at 160 with a 9-period moving average, remember a while back I drew in this rectangle formation. What's really important about it is that if there is a break into the 159, 158 area, and the transfers Dow's of 23, S&P's of 7, we're looking at the potential for an Eiffel Tower pattern. What is the Eiffel Tower? Well, I think you can see it perfectly here. If I can go to the 10-minute. Yeah, there's like a single leg A up that fails. That's what we saw in the E-minis earlier today. And look where we are. There's a 1-to-1 expansion to the downside. Now we're at 2240. Very negative. So what I'm looking, one of the reasons why we wanted to go short, even though we had that beautiful entry, the very low tick. I was going to say, we've got the low tick. I think this is it, the low tick. Let's just hold it. I didn't want to give up very nice gains altogether. So we maybe we'll be able to get back in later by tomorrow because we only have a once a day newsletter early in the morning. But it's okay because it's being made up beautifully by the other instrument that we bought this morning, and that's really good. 3 times short one of the ETFs. So when I'm looking at this, I'm saying, let me show you something else. I don't often talk about this because it's been an experiment for the past year, but I've used it as a trading vehicle. I've used it in all sorts of ways. I think I feel a little bit more comfortable actually talking about it publicly now. I used the Elliott wave for a while, and I said, Elliott wave, and then I got all these emails from people saying, we use Chapman wave, and we find that when the Elliott wave gets complicated, the Chapman wave makes it much clearer. Well, I went back to Elliott wave, and we got that beautiful 5. Remember last year, this time I was saying this is leg 3 up, wave 3 up in Elliott wave. I'm expecting there's going to be a sharp 4 down, and then we should get 5, and 5 will be if the monthly chart makes a new recovery high after that, which everything's fitted, except I found in my own trading that I broke so many of the rules of Elliott Wave that the only thing that was resembling it was that I was looking for a 5. So everything in every day, besides all the work I do, I still do not just one. Now I do 2 charts of the 120-minute chart Dow to show, and it's not always right. I had a 5 over there. I said, no, I think I might have to move it. Well, I moved it to there, which worked out perfectly at 19,987. That's why we wanted to short that. We wanted to buy the volatility index right on that pop to the upside last Tuesday, I believe it was. Wednesday. But look, now we've got the 5 concluded, and we've got a 1, 2, 3, a sharp 4. I'd already put that into my newsletter. I wonder if I've even got that around to show that there was a good chance. Yep, I do. So let's see if I've got it right here. Probably took it off because I like to clean things up. Double chart. I bet it's gone. Oh, yeah, it's gone. I just tried to clean it up. There were just too many charts here. What a pity. Right, well, what it showed was 4, but there wasn't just these 2 candles. It was there, and I put in a 4, and I said, I think we can come down to a 5. I have no idea if we're going to, but if there is, there's an arch formation. A left is a 120-minute chart of the Dow. No MACD, no stochastic, but it's got some other technical tools. And there's a left side, right side price. I did the plumb line on a particular candle, not the top, but the candle that I chose because of the characteristic of that candle. And we went to the right, and it said maybe at 4 o'clock on the 4th, wow, that's tomorrow, we can start to come down. And only if we break the low that was made on Friday of 19,718.67 will we start to get 5 to the downside. And then we've got to be ready for another potential pop to the upside, but lower lows and lower highs. And here's the one that has just the rectangle formation. Remember we were talking about the rectangle formation? You could have it inside buy mode that goes just above the previous high. So there it is. Look at that. It went to a C- and then failed. So this is all suggesting to me that there's a chance that we have seen at least the intra-week high in the market. We'll see. That's just the way I'm looking at it. Now, let's do a couple of other things. I want you to look at the EUR USD. This is the currency pair of the dollar, euro-dollar currency pair, trading at 1.04175. I hate those numbers. Minus 0.01. But what's really important is we've gone to a lower low. That's not such a good sign. And in the monthly chart, the second month in a row, we're below the low that was made in the euro back in March of 2015. Not good. So this all is saying that the dollar still has some internal strength. And that kind of confirms for me that this is going to be a much better move in gold stocks, the gold miners, than actual gold itself, because I think gold is still going to be tethered to the action of the dollar. So I wanted to get that across of what I'm really looking at. So what I'm looking at here is that within the context of markets, let's just say I wonder if this is the one. Is it? Yeah. If I go to the New York Stock Exchange, remember this is the chart that we look at every couple of months. That was that parallel, that move from 2000 in September. You remember that the market made a high in March, the S&P and the semiconductors, the ones that were on fire, the high techs. The Dow made its high in January the 4th, I think it was the 14th of 2000. And then what happened, you got that major plummet to the downside. When it makes a low back in 2003 in March, at 44.18 after hitting 71.64 in 2000, and then it runs all the way up to the high of 10,387 in October of 2007. And then what happens? It pulls back again. But why has it got an Because that bar right there is the failure pattern in the MACD and stochastic. What I had said when we did the same thing in May of 2015 at 11,254, I called it number 3. I said, no, woohoo, this is way better. This is much nicer action. And the New York Stock Exchange has gone to a new all-time high by 1.5 points. But it's a new all-time high. It doesn't matter. For me, that's really important because it confirms a blue C and not an E. And I suspect that we will go to a D at some point later this year. That's really what I wanted to say. And we're about to take a break. Basil Chapman, Tiger Commissions Hour. Dow's only up 33. S&P is now only up 8. It had been up 1920 earlier on. Not such good action. I'll be back straight after these important messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So real quickly, I had in this last segment, let me just do this. FXP, which is the China, is the inverse. Let me see if I can do this quickly. A, B, C, D, E. And that's going to be A, gray A. And either F or B. Wow. Okay. I'm going to suggest to you FXP, which is the ProShares Ultra Short FTSE China 50, is right now at, let me just FXI. Yeah, you see, FXI is doing a little bit of what gold is doing. So I think it's a counter trend rally, but I'm looking at the FXI and I think it's going to be going lower. So I'm just going to say to you that FXP, if I had a preference, I'd say that as long as 32.50 can hold and it can hit 34.16 by Thursday afternoon, I think it's going to go back and retest 35.51, the 200 period moving average. Hope that helps you. So let me just get this quieter because that's Right, there's something I have to respond to in a moment. So the next question was the XLF. What's with the XLF? What's with BKX? See, I'm waiting. I just don't think that this is the time that I want to be buying the financials. They've had a fantastic move, gone to leg E in the weekly. I just think it's going to pull back. I drew in the rectangle, so I think Goldman Sachs, they're all in the same position. I think they're going to be pulling back. Not a big deal at this point. It might turn into a big deal. I just think that the upside is limited and the downside is less limited. Let's put it that way. And the XOP was a question. Is it a dollar XOP or just XOP? I can't remember now. XOP. XOP, which is the oil, spider oil and gas exploration. I just pulling back from the 200-period moving average at 41.47. I think, yep, I'm coming. I'll call you in a minute. There. So that 41.43 level on the XOP, I think is going to have a tough time until it can break 43.60. I just think that the XOP is just kind of stuck for now. That's the way I'm looking at it because of the way it's peak D in the daily, peak F in the weekly, gone sideways. It really 43.50, and I'm saying to you, hey, now it's going to go and test 45.65, 200-period moving average, a break under 40.60, and I'm saying, hey, hold on with this. I don't think the monthly is bad. I'm just thinking it needs a little bit of a breather. It's had a big move. Hey, I think that's it. So let me look at the time. Great. Now I can talk about the volatility index, the VIX index. The VIX index right now is at 1358, down 46 cents. It actually went all the way down to 1300. And I think that the volatility index is something to monitor right now. In the next few days, if the volatility index breaks above $15, you're going to see triple-digit intraday down moves. You should. It doesn't mean to say you will, but you should. If, in fact, it goes to the 16s, I'm not sure it's going to go to 16s just yet. That's going to be very, very important, a big sign of weakness. I'm just thinking here that at 1357, these are the numbers to watch. Volatility index in the next day or two that goes over $14.25 says selling pressure will be maintained. Volatility index that closes today near the lows of the day, near 1320 or lower, says, hey, there's still enough strength to try to retest the highs. My thinking is that we've kind of made the highs for now, and we're going to see lower lows and lower highs. Not a big deal yet. It might become a big deal if, in fact, the volatility index starts to spiral higher. So I'm just trying to put it in there that I'm somewhat cautious. We do have short positions. We also have some long positions. I'm watching things like CTAS. This is Cintas. It's kind of stuck. There's that. There are those eyebrows. That's the Groucho Marx eyebrows in the weekly chart. Got to watch it. Got to watch Teledyne. Got to watch Berkshire Hathaway. Folks, have a wonderful week. Stay tuned for your great shows coming up. Look at Berkshire down. I think that's a sign that says, be a little careful here. I'll be back tomorrow. Have a great day, and thanks for being here. Check out my opening call and the webinar coming up a week from tonight, 30th.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.